Welcome to a live trading session with the Veriport Trading Group. Today is Friday, January 27th, and the bell has just rung. And we are looking at the Russell 2000 Emini, the TF, using our long-term, medium-term, and short-term charts. And our money management rules for today will be taking trending, reversals, and counter-trend trades. So as we open up this morning, we're coming off some bad GDP numbers. You could see the market sold off right away on that news. And we, not surprisingly, found a little bit of support in a previous area of support. So what we're looking for here, because we're seeing a squeeze showing lower lows, we do get the squeeze on the 550 also showing lower lows. It kind of got choppy. Again, a slight look at a possible counter trend trade here, but we're going to go ahead and see if we can get filled on a one tick below the swing low if the market starts to sell off a little bit here based on the news. So not surprisingly, we're getting a little bit early just because we're trying to make this video, but technically the futures really don't start going until about 5 minutes after the market opens, so it'll just kind of bounce around a little bit. But what we're really hoping is that we can get this filled. Now we did see a new swing low paint. So right now if this bar closes above this previous bar in the 1500, even though we're still red, it might signal that they're going to try and fill the gap a little bit. Not surprisingly. So we'll just wait and see. We'll keep our limit order in for right now, but we'll just keep stepping back and looking at this. So again, we are still looking at lower lows on our 1500, but our rule of color, direction, and squeeze right now is a little bit out of sync because we are going back up right now. So we have to pay attention to what the 1500 is doing. You can see we have a clear reversal opportunity. The fact that this is what we call our reversal sequence, where we get turnover on the 550 squeeze histogram with higher lows, red bar, green bar. So we'll see how this goes. Or we may get a better entry if we bounce up here, touch the moving averages, and come back down. At that point, this previous swing high will become our entry point with a tick below that swing high. The markets have been not so volatile the first few weeks in January. It seems like the big moves come in the first hour or so, and then it just kind of dies out. So hoping to at least get a good trade in the morning here. Okay, we did close. We're inside a support zone, a previous support zone. Support resistance zone from 2 to tick. Again, markets are trying to fill the gap a little bit here. Dow opened down about 50 points this morning. Okay, now even though we had counter trend trades in our strategy, early in the morning I just like to pick mostly one strategy at least to start off with, just because the market doesn't really know what it wants to do. So rather than look for 3 different types of trends right from the open, look for reversals or trends. Okay, now here's a gig. For us to move our stop up to, our limit order entry up to this guy here, we really need to see some participation in the 550 squeeze. So the way this will start to reform is we want to see a red bar, and we want it to make a lower low at this point. So here we are touching the moving averages. Let's see if we get a bounce out of this, if we continue to go up. Again, we were looking for a breakdown of this area here, and that's what led us to put an entry order via limit order on our 133. So you can see our long-term chart is really signaling a very strong pullback. We're starting to get higher lows on the squeeze. We're still getting higher lows on our 550 squeeze. Our holy grail in the midterm actually shows a uh, pretty good move in the opposite direction. But look at this move here. So here's a perfect example of abiding to the rule of trade what we see, not what we think. GDP came in under the expected number, and the futures sold off immediately. So when the market opens, I'm sure we had a crowd of folks who just shorted this puppy right at the open, and look what's happened. Basically on a TF, it's gone from 787. It's retraced 4.5 points. That's 25 ticks. So if depending on what your stop is, I can't imagine that a lot of people stayed in that trade. Rather we were paying attention to what we were seeing, which was red. We were looking for downside, but we didn't get execution because our 550 told us that we're not ready to go to the downside yet. Okay, so let's wait and see if we get a trade here. Okay, for us to go to the upside, we're going to want to see a blue bar paint. We may not get a yellow bar because of the sequence, but if we get a blue bar close above these previous red bars, and then we get our histogram above the bias line, we'll start looking for long side trades. So right now we are trade neutral. In other words, we have no trades on, but we are still biased to the downside in terms of where we want to get in. And we're still holding our limit order here. Time will determine if we move it up to here. We really need to see, at least initially, a red bar or possibly a bar that turns around and that starts heading to lower lows. Okay, we let time pass a little bit. We can see not a lot of change to where we were before, other than we are starting to get a yellow bar to paint on a long-term chart. Histogram is starting to show some strength to the upside. We are definitely bouncing off the moving averages on our midterm chart. Again, you see a strong move to the upside on our holy grail, but we are getting one of our signal lines showing an overbought situation as it crosses over the upper channel. And on our squeeze on our 133 chart, we see what's typically a strong buy signal where our holy grail signal lines are right above the upper channel line, and then we get a signal line cross under oversold, and then it'll snap back and head back up here. But right now the 133 is showing some resistance up here, as is the candlestick formation against the moving average on our medium term chart. So we're monitoring the yellow bar on a long term. We have no trades on at this point. Again, we want this now. At this point, this can turn blue or red. We don't care. We're just looking for a trade. We really no longer at this point have any bias in direction. The only reason that I'm still kind of leaning towards short side is because of our bars, our histogram on the 1500. But the yellow bar kind of throws that out or throws caution to the wind on that move. Okay, so it's 8:40, 20 minutes into the session. We haven't traded yet because we really haven't had really any opportunities. We may go back and say, well, here this was a great counter trend. But again, we decided to sit on our hands and let the market digest a little bit since it was opening off of bad news. So again, people that shorted this morning just on bad news, they're still kind of getting kicked in the teeth. Folks who play the gap, which is a very common play, and I know quite a few people who just make a living off trading the gap, which is basically if the market opens down, the logic is that in the morning you got profit takers, you got people that are shorting, and you create a little bit of a pullback, and you're not trying to fill the entire gap. In other words, if it opens down 50, you think it might retrace a certain percentage, and those people go and take counter trend trades trying to fill the gap, as the name implies. Okay, so now we're kind of it's starting to look a little to the long side here. So now we're tell you what we this yellow bar is signaling reversal, so we're kind of eyeballing here. If we get this guy to paint above here, we might actually do a market order entry to the long side. So this is how things quickly change. Again, we want to see this guy paint, so we're even going to put we're going to go ahead and put a limit order one tick above this guy. See how we do. Okay, again, using the long-term chart, yellow bar means possible reversal. We've seen a strong move up, and we're starting to see the Holy Grail, I'm sorry, the squeeze bias line turn green, and that moves it. Okay, we just got filled. Let's see if we can get in a profit here. And that led us over to the 550, which definitely showed a PBF trigger here, but also breaking above the moving averages. We got the histogram forming above there. Okay, we're close to taking our first contract out, but you can see we're kind of bouncing around here. Love to take a couple of these contracts off and then tighten our stops a little bit. Now we would scale into this trade, but we haven't, early in the morning, I like to keep it a little bit light sometimes, again, until the market really shows how it's going to behave for the day. It's kind of bouncing around our entry right now. We're down one tick on three contracts, down two ticks on three contracts. We're not going to move our stops. We're going to wait to see if this guy takes off or not. Now I do have time stops. If typically 5 minutes for me is more than enough time, I'll just get out regardless if I'm up or down. It's a rule that a lot of people don't like. I would just rather not be sitting there waiting with my money on the table. I'll get out and just look for a new trade. Okay, we're up three ticks right now. Really love to take that first contract out. We need two more ticks on this trade to make at least 50 bucks on this trade, and then we'll start moving stuff to break even. The patience game. We're really being tested here. Really being tested. Okay, we just took out our first two contracts. And I'm sorry, we took out our first contract. We're in the money. We're coming up to, I'm going to tighten up the stop on that second one. I'm coming up to taking out our second contract at a full point. Okay, but we got taken out as I tighten my stop. So right now we are up 66 actively on this trade, but we're already out at about plus 110 or 20. And we're looking at a trailing stop in this last one. We want to see if it continues to go up. It's pulling back. Coming back to our break even. Okay, now here's where we would add in because we've already taken money off the table. So what I would do is what I'm going to do is put three more contracts, but it has to be better than our previous entry. At least one tick better where we sit now. Okay, but since we're kind of running long in this video, what I'm going to do is just move our stop to +2 and kind of manually go to +3. We'll manually adjust our stops here, see if we get a runner or if we get taken out. Okay, we're going to leave our stop at +5. So definitely a profitable trade after some patience. Okay, so as this trade comes to a close, let's regroup and summarize. So market gap down on some bad news, and right from the beginning, it didn't really go anywhere when the market opened. Rather, it started to fill the gap and go back to the upside. So we did have some bias to the downside based on our based on our 1500 squeeze, and we didn't really have anything setting up to the downside on the 550 at that time, and that's really what we were looking for, a yellow bar or some continuation pattern. A counter trend did present itself, but we were just sitting on the sideline because it was early in the market. So eventually, when we saw the yellow bar start to form, we saw at that point that the medium-term chart was showing a PBF trigger with the blue bar closing above the moving average, but more importantly, the histogram went to the upper side of the squeeze, and then we entered on a limit order right above one tick of the swing high. Scaled in with, or went in with 3 contracts, used some tight management, and we ended up closing 130 gross on the trade for the day. So just one trade, one winner, and no idea if this is going to go up or down at this point, but you can see it's coming as it comes closer down to our entry point. We would be flat to possibly, well, we would be up a few ticks on this trade. But by using aggressive and active management, we were able to get $130 off of 3 contracts, or about $35, $40, $42 per contract. Good trading.